Hey guys, so in this video we're going to cover the new addition to the DTB system. So this is the 20th of July where I am. So we'll have a look at the indicator. So DTB Fibonacci Levels. And what this is going to do is you're going to be able to draw the Fibonacci levels for monthly, weekly, daily, for the 240 minute, the 60 minute and the 5 minute. And you're going to be able to select which ones you want on each chart. So this one here, I've just loaded the monthly, so the orange and the khaki. So there's two different levels to this. So this is going to cover the last 12 months worth of data. So the monthly Fibonacci is the last 12 months. So we want to know during the last 12 months, what are the Fibonacci levels? So there's two levels, as you can see. So from the beginning of 12 months ago up until the high, so the low and the high. But then what we also have is we also have another Fibonacci level drawn from the 61.8 to the high. So if I go to the indicator list, there's also the option to go and remove that specific one. But that is a very handy one to have on, because it basically segments the Fibonacci level or the range of settings. So by having it off, what that's going to do is it's only going to show us the Fibonacci levels for that level. But a very smart man introduced a system where you're actually segmenting the Fibonacci levels from the 61.8 and drawing them to the 100. So if I go back to the indicator settings and I put this one in, and it's going to be as khaki, and what that's going to do is it's going to draw from the 61.8 to the 100, and it's going to segment that section, and you'll find that the 38.2 is going to match the 76, and then it's going to further just reduce that. Okay, so that's for the monthly charts. And with this chart, if you want to see these levels, you can load 400 days. So 400 days will give you, the trading days for the last year. So that's fine to have on there. I've got break at end of day, which doesn't make too much of a difference on this chart anyway. Monthly, weekly, so the same thing with the weekly. So with the weekly, we've got a data series of 180 days. And I've done the same thing there. I've actually got the Fibonacci levels for that period, and it's also segmenting from the 61.8 to the 100, so extra levels there, and you'll see how those levels come into play quite frequently. So I will remove it temporarily off here, and so just have a look at how those levels are actually respected with this setting. So you can see over there, so if I go and remove that second one, what that's going to do is it's only going to draw the Fibonacci level. So that's going to show you up to the 76 and the price movement in that range. But as soon as you're adding in the addition to that Fibonacci tool, which is expanding it, it's going to give you those mini support and resistance points in between. So very handy there. Okay, the next chart is the daily chart. So with the daily chart, you can bring up 120 days. And the same things happen there. So from the lowest price to the highest price, it's got the levels built in, and it's also got the segmented ones in there. So that one, 240 minute, we've done the same thing over there. And you'll see how, like, there's the 50%, how that is that level is hit and respected. Prices bounced off, even the 23.6. These levels are definitely respected very well. So 60 minute. Now we haven't done this with the 60 minute. So from the 60 minute and down, we've only got the one level. So it's going to be white for the 60 minute, and then the next one is gray for the 5 minute. Okay, so for the 60-minute chart, you can just load up 5 days. That's more than sufficient for that. And it's going to give that level. And 5 minutes. So this is the 5-minute chart, and it's only showing the gray level. So this is the intraday basically Fibonacci levels for the 5-minute chart. So it's showing those levels beautifully. You can see we've had, you know, the price break up to the 76, break through, probably going to come down and retest that and float around there. Okay, now this is a chart where they're all loaded together. So I've just loaded one day on here. You don't have to load all the data on a chart. It's still going to paint all those Fibonacci levels in, no matter how many days you have loaded. So if I go in and reduce this, you'll see all those levels from all those different time frames on there. So you can obviously go onto your indicator list and you can choose which ones you want to display on each chart. I'm just going to leave this all on there for now. And that's when you can see how the different levels are hit. You can see how, you know, the price came down, bounced off the 38 and both of these 38. So if you look into the indicator list and you familiarize yourself with the different colors for each of them. Unfortunately, I haven't got a I would like to actually label these to say monthly, weekly, daily, hourly, you know, instead of just having you know, the numbers there, so it'll be a bit clearer. But for now, we just got to familiarize ourselves with the colors. So we know that the green is a 240 minute, and we know the lawn green, which is the bright green, is the second level. The white is the 60 minute, and gray is 5 minutes. So if we start learning these colors, we'll be able to work with these. So royal blue is at 50 there. So that's how we can just at the moment learn how to work with this. Okay, so that's just the levels. Now what I've done is I've gone and included the levels with indicators. So again, this is just the 5-minute chart, and I've got the shadow trading indicator. So when you're seeing the price, so one of the most powerful signals of this is the shadow trading indicator, and that's giving us the signals where the momentum line is shifting away from price, and you get these divergences over here. So that's telling you there's a very high likelihood that price is going to be going up. And if that is happening around key Fibonacci levels, then you've got that high probability of price doing that. So a nice rise over there, and then coming back to meet with price. So here it's broken below the 50, may even come back and retest it before it drops down, or come back and retest the 76. So that's one of the indicators. Here is the levels with the ultimate bands and the shadow trading. So again, you can also react off the price movements, and I've still only got 1 day loaded on the chart, so you don't have to have a lot of data loaded on a chart to work with this. So it also gives you opportunity to buy and sell based off the bands and those levels. Here is just the trend following indicator with the levels. So same thing there. Not as clear on a 5-minute chart. It works a bit better on the tick charts. Okay, and here is a 5-minute chart with the ATR indicator. So again, I've only got the 1 day loaded, and I have got the indicators loaded on here as the levels I've chosen. I've also selected a few fewer levels. So you can go through your chart and look at your chart while you are trading for your specific session. And you can go and remove the ones, you can go remove a few of the ones that aren't in play or are not near where you are, just to make it a bit clearer on the chart. Okay, and then what I've also done on this chart is I've loaded the ATR Analytical. So that's a great little indicator, and it provides the coloring for the bars based on the direction of it or the overwhelming trend. If you are not too happy with all these triangles and stuff, you can come into the settings of the indicator. You can change the triangle size. You can even make that even a 1, just to make it like really, you know, so it's not really visible. There we go. It's just going to put like a little dot so you will hardly see it, and that'll just neaten things up a little bit. These values that you're seeing on there, there's like this 149, 22, 90, 45. that's how many ticks the ATR is away from the price. So if you're seeing all these numbers, it's basically telling you how far that bar is away from price. And as you can see, as it comes closer, there it's only 7 ticks, and there we had a turn, a flick over. So in this type of case, if you were watching these levels and you were thinking, you know, I'm only going to act on a position in the opposite direction when I get a change in average true range, and you get these signals like that over there. So you had a turnaround, even back over here. You had the price come back down again and touch the 76.4. And then you had a nice opportunity here to jump in a trade long. And then you're looking out for strong support levels. So like there's the hourly 76.4 and the 50% level. So the 50% for the 240 minute. So that's the 240 minute 50%. And you've got the 60 minute 76.4 level. So that's how you can combine the indicators with the levels to enter position. So let's have a look at another chart. This is just with a smoothing average. So again, I've selected a few of the levels, and then I've put a smoothing average on the chart. The smoothing average, I've just made it a 20 smoothing average. So that's just a moving average value that you can select. So obviously, depending on what size bar you're using, what size candle you are using, you can modify that value and go from there. And also how long you want to stay in a market. Okay, so that's also going to give you a similar type of thing to the standard ATR, where it can either keep you in a position for longer or help you, you know, to enter a position in the opposite direction, off bouncing off the levels. Okay, so next chart, let's have a look at what it's done on the next chart. Okay, this is with the velocity indicator. So the levels with the velocity, similar type of thing there. You can, you know, react off levels. Even as the price is coming down, you can react off those levels. And the next chart, okay, so this one here is the levels with the brick wall indicator. So if we go into the data series, I've got 15 days on here. This is an 8-8 bar, so DTB bar is 8-8. And remember, you do not have break at end of day on the DTB bars. So I've loaded 15 days, and I have also put on just the standard default setting for the SI, which is a 4-4, and I've added the shadow trading. So what this does, remember with the shadow trading, you're positioning your red line so that it's on the far left of the chart. But with this, we are basically seeing the brick wall. So I'm just going to temporarily do this. So where are these fib levels in connection, you know, in comparison to the brick walls? So that's another thing that we haven't fully evaluated in the, you know, in the group, or haven't actually looked into this much. But these fib levels can also play a very big part in determining, you know, the strength of the brick walls. So we've got the 76 and the 50 that we had earlier right here on a brick wall. So we've had signals to buy, like even at the bottom here we had signals to buy. Coming up to brick walls, the brick wall is very close to the 38. So a bit of resistance there, coming back down again. So that's why that price went up, came back down a little bit, basically bounced off that brick wall. The fib was not too far below it, and then continued up. Over here we had a brick wall form underneath the fib level, so that's a good support, that there's a good chance that price is going to break through it. And anyway, our momentum line is right with the price, so that means that that price is still running up. Now remember, in real time, this is what you're going to be seeing. So here we are again, we're coming up, we've got another brick wall that's formed, we've got a fib level over there, underneath the brick wall, so a small possibility opportunity to enter, but as soon as that happened, the price reversed, momentum line shot up again, and now we're floating around this brick wall, which ultimately held up the price, broke through these fib levels, continued right up again, and at this stage we've got our momentum line dropping considerably. So this is a very high likelihood that price is going to be reversing. We're having a color change in the bars. So as soon as the bars turn to gold, we know that the sellers are in control of the price. And then what happens, that momentum line just pulls that right down. We broke right through those fib levels, broke right through it, broke right through the brick wall, and momentum line has come back to price. So a good time to get out of a position and wait for the next opportunity. Over here again, we've had, the price come back up right near to test that brick wall, come back down again. So we're a bit of in no man's land at the moment. If you're looking at this, there's no specific levels very close to actually trade this price. So it might be a time just to stay out for a bit and monitor other charts. And okay, so this is just a 5-minute chart with the pennants, so that predicted that breakout over there. So with the pennants, you can definitely go and add in, just have different values for your length of trends. So again, depending on what size bar you're working with and the rest, it's a good idea to just experiment with those numbers, because they will change based on the bar size that you're using. Again, with the fib levels, I just removed some of those. What else have I got? Okay, so what about a flat baseline? So a similar thing there. You can load up your fib levels on your flat baseline charts and your trending baseline charts. So looking at like the flat baseline chart, as soon as you have a baseline form like what's happened over here, you can actually monitor what's happening with price. So we've seen here that the price came back down, bounced off the 76 and the 38. So it's basically formed a new low in price, as you can see, the 100% on the 5-minute. So it formed a new low, kept bouncing around, touching this. So a very high likelihood price is going to bounce up based on it retesting these levels. So also opportunity over there to activate this automated strategy to trade this price back to the baseline. So if you're looking at if the price is running a baseline like that, and we've got between 1 p.m., 2 p.m., 2:30, 3 o'clock. So if between 1 and even if at 2 o'clock you notice this baseline form, and you want to run your strategy for 1 hour, you can come and load it up on your chart. So you can go to your DTB Medina Wick Trader flat baseline. You can calculate how far, let's do that first. You can actually calculate how far that 76 Fibonacci line is away from the price. So you can do that by using the ruler, and you can say, well, that's 75 ticks. Okay, so it says about 70 ticks. So what you can do is you can go to your strategy, and you can go to your flat baseline strategy, which is, where are we? There. Okay. You can add in your retracement level. You can actually make this a nice and a low number. Your minimum distance from the baseline, you can make that a 24, which is 10% of the baseline. Maximum distance from the baseline. So you can say you only want to enter positions up to 200 ticks away. Actually, no, because this is the 76 and there's the 100, you can say I'm only prepared to enter positions up to a maximum of 150 ticks. Okay? And my stop ticks, because my maximum distance is 150 ticks, I'm going to have my stop ticks as 180. And this is where you can delay your first trade. So you can delay your first trade on that wick by 70 ticks. So you can say I only want my first trade to enter once the price touches the 76 or very near to it. That's where I want my first trade to enter. So you can either put there, so you can even just put 70 in there. And then you can choose, you can say, you know what, I'm prepared to space out my entries. I don't want all my entries bunched up together. So I'm going to space out my entries by 20 ticks. And I'm going to target right back to the baseline. So instead of having an individual target per ticks, I'm going to have a target of 5 ticks to the baseline. So that type of thing can be activated like that. So this is what you would do if you were watching this baseline, like at this point here. You activate your strategy. There you've got your stops and your targets. So we'll look at this chart in particular. Now, unfortunately, there's quite a lot of levels and stuff showing on the chart, but once you understand how to work with them and the colors, you can actually do that. So you might even decide, once you've set up your strategy, you can actually go and remove your levels completely, like that. Once you know where those levels are, you've done your calculations, and then you will actually see the levels of the end of the strategy itself. So you seeing the green line. The green line is your wait, is your delay first trade. So we selected to delay the first trade by at least 70 ticks. I think we put in 70 ticks. So the price is going to move from the wick. So you can imagine at the bottom over here, the price moving away from the wick. The first trade only entered at 70 ticks, which would have been over this green line. So this green line would have been about over here. And the stop is going to be at that value there, which we put as 180 ticks. Okay, which would have been about over here. Let me just draw some lines over here actually. So about over there would have been your stop, your wait or your delay would have been over there. Now if you look at these little cyan markers there, so the cyan markers is the area of where trades are going to enter. So you're only going to have trades entering in this range between that cyan marker and this cyan marker. That's the only area where trades will be entering with this strategy. So if price goes outside of that range, there's not going to be any trades entered. And if price goes outside of the range here, there's not going to be any trades entered. They're only going to be within this range over here. And they're also going to be spaced out. So there won't be any trades within 20 ticks of each other. So that's how you can basically set up the strategy. The Medina Wick Trader strategy is extremely powerful. So have a very good look at it, and I'm hoping that these levels will really help you guys to determine where good points would be to start your strategies. So if I remove all these drawing tools, that's right. So experiment with these levels, and these Fibonacci levels are extremely helpful. And also with the indicators, as a DTB member, you've got access to all of these indicators. We've got so many indicators that provide such great value. So add those on to your chart, see where your different levels are, and work from that. So for example here, we've on this current wick that we just selected. Okay, I'm just going to expand this a little bit. On this current wick that we just started the strategy on, you've got a 50% Fibonacci, and you've also got the 5-minute 76, and you've got a Fibonacci here, which is the 0 or the 61 point. That's the pink Fibonacci for the daily, I think it was. So if we go to the, actually it's the deep pink, so that's the daily 61.8. So that's where the daily is. Okay, so you can see it's the 0 is overriding the 61.8, and that's because the the new level, the level 2, which is this one over here, is basically drawn from the 61.8 all the way to the 0. So if I remove that, just the number 2 will actually see the 61.8 text there for that level. There we go, 61.8. So that's another way of trading this thing, is, you know, looking at where price is, where it is currently, how far it is away from different retracement or Fibonacci levels, and then entering positions around them within a certain range, trading that price back to the baseline, or even trading, you know, to a certain range. So if you could even set your profit target. We selected 5 ticks from the baseline, but you can say, you know, I want to make sure that there's no major resistance over here if price comes back. So I want to have my target over there. So if we work out what that distance is, we're working at 34. So you could have your strategy. You could have your strategy set to fixed target ticks on wick. You can make that 34. And if you change that value from 5 to 34, this target will basically be moved to over there. Actually 34, which will be, actually it's away from the baseline. So we worked that out already. It's going to put it over there. So that's where the target will be moved to when you update, if you set up your strategy to do that. Now you obviously cannot move your targets, because the program, the strategy manages the targets according to how you've set them. But that's definitely going to you know, help you set it up. So that's a way of how you can manage your strategy. And obviously, if you are changing your target for your you know, your strategy to 34 ticks, make sure too that your minimum distance is above that. So you don't want to have a target of 35 ticks from the baseline, but your minimum distance is 20 ticks, because what will happen is when the price goes beyond your target, it will enter a position and it will immediately exit because the target's over here. You see? So by having a 35 tick target, you're going to make sure that your minimum distance to enter a position is at least 40 plus, because you don't want to enter positions within below the 35, because as soon as it enters a position, it's going to put a stop and a target, and if that target or stop is beyond, you know, that where the price is, the wrong side of it, it'll just exit the position. I didn't really mean for this video to go into the wick trader strategy, but I think it's really cool to look at, because this is an extremely powerful strategy to work with. And you know, if I just pause this now, what it does, it'll just pause the strategy and close it. But you know, you've also got long, you know, different types of baselines. So this is a long trending baseline. So on a much larger chart, this is a 440 wick. So each of these price deviations is again a deviation from the baseline. So if you were trading a much longer period of time, you would be looking at perhaps trading this price back down to the baseline. Now it may do that. It may come and touch the 61.8. It might go there and then bounce up and go up. You know, so that's why it's very possible that even though this wick can come down for a bit longer, there's a chance it might bounce off the 61.8, because that's a very strong level, and then go back to the baseline, which is what will happen over here. So the price will come down and then go up again. So that's why you can look at all different types of wicks, all different types of charts, and determine what is more likely to happen. So what could happen here too is that this 244 chart, this wick here, might come down and break to a new baseline, which will make it right near the 38.2. So if we look at this, that's very well could happen. The price could come down, break through the 61.8, come to the 38.2, and then back to this long trending baseline. coming down. So there's a few different ways to trade this, and I think the most important way to look at it is to see what is happening on your signal chart. So if you're trading a 440 chart like that as an example, you want to have your signal chart, where were you? Probably this one over here. So I would have this as probably a 22, and I'm going to just move this to a new window like this, decrease this one. Again, I wasn't really meaning to delve into this, but this is how you can look at different, I don't know, I hate it when NinjaTrader does that. So you've got to hold your Alt button and your arrow to do the sizing. So there's your trending baseline chart. So you're watching, so this wick that you're seeing over here, this very long wick, I mean this wick, if you look at the length of this wick, it went as high as 410 ticks. So 410 ticks from that baseline. So if you're looking at your signal chart, you know, first of all, you would be looking at what's happening with the momentum line. So as the price is climbing up this wick and forming this long wick, your momentum line is above the price. Above the price. Only over here, let me just check something here. Yeah, that's fine. Only over here does it start coming under the price and there drop. So only from this level here would you start off thinking about activating a strategy on this bottom chart, because the price has broken through the Fibonacci level, the 76.4. The momentum line is finally below the price. So if you look at what level that is, so if you look at the level that was at the 33914, which is quite high up. So it's only from there would you start looking at, you know, entering short positions, coming back down in the favor of that baseline. You know, and even if you're just taking short positions and you are scalping from the top of that candle to the bottom of that candle, and you entering sell positions, so you would sell, you would basically sell over there, have a target over there, and then those can be little scalping trades of 22 ticks, or you know, or selling at that level, having your stop above the Fibonacci levels and then targeting prices lower down. So that could also be another option to do. So entering positions, buying and selling, or actually just selling because the momentum line is below. And that way you can just enter positions, but you know, depending on which chart you're looking at much longer term or shorter term. If you're looking at a much shorter term, you might want to go for one of the flat baseline charts and looking at those levels. So those levels are very handy to look at. So especially when price breaks through, and as we discussed earlier, we've got the brick walls. Now I haven't got a brick wall setting on here for the 22, but that can definitely be found. But if you're looking at the brick walls, you can see where those brick walls are, and then you know where more likely is price going to go. So we know that if it breaks through a brick wall, comes down, goes up, comes down, more than likely going to bounce around, either going to break right through again or bounce down and go back to this baseline. Okay, so that was basically what I wanted to cover in this video, these trading and these Fibonacci levels. So a final thing too, when you load up this indicator on your chart, you need to just go into the OneDrive, not the OneDrive, so if you look at the indicator and any of the indicators, you've actually got a link over here called DTB Product Training. So if you copy and you paste that into the internet, into your browser, it'll come up with the drive. Now this is the drive where all the training is for the tools. I have not actually put information in that folder yet for these levels, so I'm going to be doing that shortly. But a very, very important thing to do is to go into the templates. So click on the templates, go into the folder and drawing tool. So here are the Fibonacci retracements. So in the Fibonacci retracements, if you don't have a folder in your templates, basically just copy or download this folder. Okay, so download this folder for the Fibonacci retracements. Because what that's going to do is it's going to give you all these the templates for all these colors and stuff. Okay, so once you've got that, you're gonna download it. It's going to look like this, and then there's all your Fibonacci retracements. So I've downloaded it. So I'm going to select them like this. These are all the ones used in that indicator. I'm going to copy this whole folder. So copy, and then I'm going to go to my documents folder, NinjaTrader 8, templates, and in the templates we've got drawing tools, and in the drawing tool is Fibonacci retracements. So that's where you would have to, so if you don't have Fibonacci retracements, you just paste the folder over there. If you do have a folder called Fibonacci retracements, if you have set up some templates before, just go and copy and paste the contents of this folder. Okay, download them like we did, and get the contents of that this folder and paste them into your Fibonacci retracements drawing tool template. So that's where you're going to find it. You're going to find it under PC, Documents, NinjaTrader 8, Templates, Drawing Tool, Fibonacci Retracements. So once you have copied and pasted those templates in there, you load up the indicator. It will present itself exactly like mine. Okay. Great, so hopefully that was helpful. If you've got any questions or anything, you can pop through an email, you can comment in our group, but I'm sure you guys are going to find this extremely useful. These levels, look, we're coming up to the 50% over here. So we definitely have some really great tools to work with. So thanks for being a DTB member, and I'll see you on the inside. Cheers.